When you hear news of how India's smart mode shipments on the export side have also picked up, you no doubt wonder at what's changed in the last 3 years for India to be able to do that well. One of the things is what global majors are betting on, which is India's manufacturing capability. And at the forefront of this are companies like Dixon, which have been doing this now remarkably well for the last few years. Their Q1 numbers came out with revenue up 14%, largely in line with what Bloomberg estimates were. You could argue that margins at 4% versus 3.5, or maybe slightly lower than what BB was estimating, but the net profit numbers also seem largely in line. Saurabh Gupta joins in right now to talk about what he made of the quarter and what could happen in the quarters ahead. Saurabh, great having you. Thanks for taking the time out.
Thank you. My pleasure. Thank you.
Saurabh, all went as per plan, or were you hoping for a slightly better performance on the operational front and that didn't come out?
I think so. It's a challenging environment. So a lot of some of the businesses like TV and lighting, we are seeing a flattish kind of a muted kind of a demand in the market. Home appliances, mobiles, we have done well, and mobiles, of course, we have a very large order book, and a lot of large customer accounts will start to see their execution from Q3 onwards. But overall demand environment continues to be weak. I hope now Q2 is supposed to be the best quarter for us ahead of the festive season. So let's see how that pans out. That's really important.
Got it. So I reckon it was mobile and EMS which led this. Were there any surprises, Saurabh, from what you had guided to in terms of segmental performances? Well, because now you guys are in a bunch of segments. At times it becomes difficult to track what's happened in each of them.
I would say broadly, things have panned out the way we had thought. Things could have been better in washing machine, in lighting and TV segment, but the market has been very slow. But we are having a lately we are seeing an uptake in demand in even in lighting and TV vertical. But yeah, one has to wait and watch how does the next 3 months go. But broadly, I would say in line with our expectations. Generally for us, if you look at year on year, so of course the margins look low from Q on Q onwards, Q on Q levels, but otherwise from Y on Y levels, all the margins have expanded, and there has been a growth in most of the segments.
Yeah, no, actually, so where I'm coming from is that, of course, you've done well YOY on a margin front relative to what was estimated. The street estimates were, I think, around 4.7. You've come in at 4. And I believe in the call or otherwise, you've spoken about how, except for hearables, in some of the other segments, the end demand was not as strong, maybe, as could have been. Now, my question is one, are you able to wrap your head around why is that the case? And two, could things change as you said that you hit quarter two, which is arguably the best quarter ahead of the festive season? The festive season also seemingly a bit delayed this time around because of the Adhik Maas.
Yeah, so Q1, Neeraj, always is like a subdued kind of a demand for our kind of products. Mostly the investments from the distributors goes mostly into the ACs and the cooler business, which has also got impacted this time because of the rain and good weather. But our real test would happen now till festive season, and you're absolutely right. Festive Diwali this time is slightly in second week of November, so we'll have even a decent Q3, I would say, as compared to last year. So yeah, we are looking for and we are very hopeful for a good festive season.
Okay. Two or three segment specific things. So, uh, is the are the volumes in LED TVs or the pricing in LED lighting uh, a consistent concern, or is this a quarterly phenomenon which could turn around, Saurabh?
No, so lighting LED is a consistent concern since the price erosion started to happen from August last year, and that's why year on year those revenues are looking lower because LED bulbs is a large part of our portfolio. Though increasingly we are making more investments in ceiling lights and downlighters, and markets are also moving towards that. We are getting into new product categories of strip lighting. We are also launching a smart lighting solutions. We've got some orders for export from Germany and also pursuing some export opportunities from US and Europe, which hopefully next year can be a decent opportunity of around 100 odd crores for us. So we are doing because this lighting LED bulbs clearly has seen a erosion, in significant erosion of almost 20-25% in value. As far as TV is concerned, Neeraj, TV, definitely there are a lot of headwinds. We don't see that the volumes this year uh, will really be. We had factored 10 to 15% growth in volumes, which my sense is looks slightly. One has to wait for the festive season, but broadly volumes would be somewhere in the range of 3.4 to 3.7 million. So there can be a marginal growth. Uh, but overall, I see that the value growth will be there because the prices of open cell or the display have started to go up again. So we'll have some value growth this year, which was not the case last year.
Okay. So net mobile drives sales growth for you for sure. And for second half of this year, one can also look forward to the refrigerator piece starting taking shape.
Yeah, so mobile will be the largest trigger for our growth. So we have bagged a large order from Reliance Jio. We have got ITEL, which is a transition company for both feature phones and smartphones. Our manufacturing will also start for Xiaomi from uh, Q2 end or Q3 beginning of financial year. And Motorola numbers are also increasing because they're shifting some more export business to us. So clearly, mobile is the largest opportunity and which we'll capitalize on. Apart from mobiles, I think so we will be filing a revised IT hardware PLI, and we are in discussions with some large brands, and hopefully that should fructify into some good business going forward. We will have better visibility in next few weeks. Third, I would say refrigerator dealers will take time. So though we expect the operations to start in October, but a lot of approvals by the brands, both global and national brands, take time, and there will be always be a very large ramp up in that because it's a complex product, our own design product. So my sense is this year to expect too much from refrigerators would be a challenge. But next year, clearly, we are looking at a zero point 0.8 to 1 million kind of a number out of the 1.2 million capacity that we are creating.
Okay, and which has got a higher operational metrics, right? Because it's an ODM product.
It's an ODM product, yeah.
Got it. Okay. Sort of last couple of questions. One is I'm taking a leaf out of the Tata Motors call, wherein they are saying that the semiconductor issue is resolving very well and second half should be near normal. Now, in a lot of products that you are manufacturing, I believe chips play a large part. Are there issues for these products as well? And do you hope that they get resolved by the second half of the current fiscal?
No, so Neeraj, we are not facing any kind of issues on the semiconductors or any kind of components. My sense it's slightly more of a demand issue right now in India than the supply side.
Got it. Saurabh, one last thing. I heard you say an interesting thing that you expect not only a strong Q2, Q3 because the festive season gets split. Wondering whether Q2 may not be as strong as normally might be because it is getting split, or do you reckon that will not be the case?
Very difficult to say, Neeraj, how will it pan out. As of now, the order book is looking good, but we had a good Q2 last year as well. But my sense is we have been able to get some new customers on board, both in washing machine. Like we have got Voltas on board on fully automatic washing machines, so that would have a positive impact. We've got some orders from mobile from customers like Motorola, ITEL, and Nokia with an increased order book. So that should have a positive impact year on year. And hopefully, TV should look better than last year.
Okay. Well, we wish you all the best for that, Saurabh. Thank you so much for taking the time out and being with us, and all the best for, well, 2 festive quarters, if you will.
Thank you. Thanks a lot.
A
And take
pleasure
care
is
of
ours. Yep. Thank you. And viewers, thanks for tuning into this conversation with Dixon Technologies.